let me give a brief introduction about our chief guest, Shri Sanjiv Chadha, Managing Director and CEO of Bank of Baroda. Shri Sanjiv Chadha, uh, since he joined Bank of Baroda as MD and CEO since 20th January 2020, and he has more than 35 years of experience in the banking and financial services, having started his career with SBI in the year 1987. Sri Chadha is also chairman on the boards of Bank of Baroda UK Limited, India First Life Insurance Company Limited, BOB Capital Markets Limited, and BOB Financial Solutions Limited. He also serves on the board of National Insurance Company Limited and is on the governing board of National Institute of Bank Management, NIBM. Prior to joining Bank of Baroda, Sri Chadha was the MD and CEO of SBI Capital Markets Limited, the merchant and investment banking arm of SBI, and chairman of SBI Cap Ventures Limited and SBI Securities Limited. Sri Chadha spent over 33 years at SBI, where he handled a diverse range of roles, including the regional head of SBI's UK operations, CEO of SBI Los Angeles, as well as executive secretary to the chairman of the SBI Group. Sri Sanjiv Chadha is an alumnus of St. Stephen's College, Delhi, a great personality. Yeah. Sir, I want to tell something about our AMP. AMP has evolved over a period of time and has gained acceptance with the banks and NBFCs and RBI and NABARD as well. And IBI has strategically tied up with IIM Calcutta to conduct a management development program at the campus as an integral part of our advanced management program, AMP. The objective of the AMP is to enhance the effectiveness of the middle senior level officers in banks by imparting the skills and the vision needed to shoulder higher responsibilities in the current critical phase of the Indian banking industry. In order to make the program more useful and contemporary and relevant to the changing times, the current structure of the syllabus of the AMP has been thoroughly revised both in terms of contents as well as in duration. Some highlights about the program includes duration of the course 10 months, 9 months courseware and 1 month project work, virtual online sessions on weekends around 275 hours, a 30-hour management development program MDP at IIM Calcutta campus, an immersion program at the corporate center IIBF at Mumbai, 19 modules spread over 2 semesters covering all key areas of banking, monthly address by the top industry leader under Leaders Speak series, case study based approach to learning, assignments, presentations, and group discussions, project work on topics assigned by nominating banks or IIBF. So it is a wonderful program, and it is participated by almost all the banks in the industry, starting from private banks, nationalized banks, and also CRISIL, CCIL, and also a nomination from Ministry of Defense. So this is a small brief about our AMP. Now I request our CEO for welcome address. Welcome you, sir.
Yeah, thank you. Thank you, Mr. Chadha, for accepting our invitation here to inspire the people who have joined our AMP program. As said by Mr. Thiruma, this program is designed to groom the people to take up responsibilities in future at various organizations, including not only the banks, including other organizations like even people participate from RBI and this time one from Government of India also. And what we see in the last 4 to 5 years, rather 10 years, the old model of leadership is completely gone. It has become obsolete, right? Earlier we used to have positions so that you can direct people. Now that part is gone, and at every level we need some type of leadership qualities. So whether it is at the branch manager level, at regional manager level, or without any position. So the wisdom of leadership has to transfer to all the participants here. That is our sole goal, to prepare them to take up future responsibilities. Many of these AMP participants have also now been promoted to various senior positions, and hopefully they are also doing their job pretty well. But the purpose of bringing these industry leaders face to face with these people are to show them how you have managed the challenging times. As I was just telling before these participants, Mr. Chadha has joined in State Bank of India as a probationary officer, which is the beginning, ground level officers, and he has worked his way up. He has proved his mettle at various positions at the GM Chennai, London office, SBI CAP. See the variety of assignments he has taken up and variety of assignments where he has succeeded. That is the true image of a leadership. If you say that you are successful in one position, it may not be very sufficient when you grow up in the organization. So you have to be successful not only at one position, in whatever positions you have been assigned. So now we bring Mr. Chadha face to face to listen from him, to learn from him, and maybe he will answer some of your questions, how things move, how things change, and how you have to transform yourself to the changing needs from a private sector, from a public sector to SBI CAP, from a public sector to the London office, foreign office, from a public sector to heading one of the biggest, another public sector bank. Right? I thank you, Mr. Chadha, and I hand over this floor to you for the interaction.
Thank you very much, Mr. Das. So I understand that we have about an hour's time. Personally, again, I would want to give it as much as possible for questions. But what I'll do is I'll just touch upon a few issues which I believe we should all be aware of. I think the topic that we have today is that what are the challenges before us and what could be the right business strategies to address them. So we'll talk a little bit about that. But from my own perspective, I would much prefer that it is interactive and we can have as many questions as possible. Also, please feel free if anybody wants any clarification, wants me to go slow, fast, interrupt, no issues at all. Please feel free to do that. So first of all, let me again express my great pleasure at this opportunity to talk to the participants in this program. This is indeed a program which is very uniquely designed with, again, elements which are there both in terms of classroom participation through the online mode, as well as intense immersion sessions. Grateful to both IABF and the CEO, Mr. Das, for this opportunity. Now, when we talk of challenges and business strategies, fortunately or unfortunately, we are in a time where we are living in a very fast changing world. And therefore, the challenges also almost are changing by the day. And if we have to even identify challenges, the second stage, of course, is how to address them. Even if we have to identify challenges, we need to have people who are fully aware, who are attuned to the changes that are happening, and are then able to fashion the responses to these changes. And that is where I believe that when we talk of business strategy and changes, it is programs like these which actually is the first step that we must take if we are to look at future challenges. Unless we have people who are willing to learn, people who are willing to understand the environment in which they operate, people who are willing to imbibe all contemporary knowledge, we will not be able to identify challenges, let alone address them. And therefore, the 90 participants of this course, I think, deserve a lot of commendation that they have taken the initiative out of what is already a very busy job. I'm fully aware that banking as it is today is no longer again a 10 to 5 job. We spend pretty much every part of our waking hour thinking about what we are going to do in our banks. After that, very often our weekends also are not really our own. And therefore, for all of you to sign up for this 10-month program, to devote weekends for over this long period of time, I think is probably eloquent testimony in terms of the fact that you are actually potential leaders who are willing to make the investments and the sacrifices to combat whatever challenges that come before us. So again, my gratitude to IFBF for fashioning this program, and to all of you to volunteer to be participants. Now, when we look at any element of banking today, any element, the fact is that we are in a stage of transition and there are challenges which are there. There's nothing in today's environment that we can actually take for granted. Nothing that we can say that what was there yesterday is current today and is going to be relevant tomorrow. In many ways, changes, of course, have always been there. But one is that if we look at our environment in the world around us, as general proposition, change has got accelerated. If we look at the world the way it was 5 years, 7 years back, whether how did we travel, how did we entertain ourselves, how did we gather information, everything has changed. But more so, it is COVID which has accelerated the pace of change. What might have been change that might have occurred over a period of 5 to 10 years has got compressed in the 2 or 3 years of COVID. And it has impacted almost every aspect of banking, whether it is distribution channels, whether it is product design or delivery, whether it is HR strategy, technology, risk management. Each one of them has almost changed unrecognizably before our eyes over the last 2 to 3 years. And if there's one thread which connects the changes in each one of them, in terms of our distribution, in terms of our products, in terms of HR, technology, risk management, it is digitalization. It is the accelerated pace of digitalization which has transformed each of these areas. So therefore, what we will try to do is to see over the next maybe 15, 20 minutes, how has digitalization impacted each of these areas? What does it mean in terms of how we are functioning today and how we might need to change tomorrow? So talking about distribution, I think that is the one which is really staring at us in our face. When we entered COVID, even then, the branches used to be the primary channels through which customers interacted with us. There was a trend which was there towards mobile banking. Internet banking had been there with us for a long period of time, but nevertheless, branches used to be the primary channel of the bank. When we thought of banks, we thought of the branches, right? But in the space of 2 to 3 years, that has changed beyond recognition. I'm not sure how many of you, apart from the fact that you might be going to branches to work, but how many of you actually have gone to a branch to transact? I think for most of us, it is now a very, very rare occurrence. Most of our customers prefer to transact with us without going to branches. Yet, nearly 70–80% of our expenses actually are tied up with branches, right? If you look at the P&L of a bank, nearly 40% of that is expenditure which is linked to branches, whether it is rentals, it is power, it is other infrastructure that branches require. And another 40% is basically the staff, again, 70–80% of which work in branches. So with this transformation, I think that is going to be the...
Please, can you switch off your mics, please?
Fine, no problem at all. That's fine. So the issue again is going to be that what is the implication for us? Now, if I were to take the example of BOB, which is, you might say, pretty much representative of the banking industry, it's a public sector bank, but it is again reasonably advanced in terms of technology and digital. So today, about 4 times as many people use Bob World, which is again our mobile application, as compared to those who come to our 8,200 branches, right? 4 times people interact with us through the mobile banking channel as compared to those who come to our 8,200 branches. Now, if you juxtapose it to the earlier fact that I mentioned to you, that in terms of our expenses, whether in terms of staff or in terms of infrastructure, 70–80% actually goes to supporting a branch network. There's a huge transformation agenda that is there before us. How do we make sure that the bank is what the customers want and the bank is able to deliver services at a place that the customers want and at the time that the customers want? I think that is something which, to my mind, is the central change which has happened, accelerated because of COVID, and which is going to impact us not only now, but over the next very many years. And the banks which are able to embrace the change, recognize the change, might again be far ahead of those banks which do not act in time. If this is the pace of change that happened over the next 2 or 3 years, you can well imagine over the next 5 years, we might be in a totally unrecognizable reality. Now, the second part again is that while mobile has become the centerpiece and branches in many ways have become the support infrastructure, in many ways you can really compare this to how Apple markets its products. So when you buy an Apple iPad or again even Apple phone, normally again you do all your research, you choose your product online, and you might just go to an Apple store for the touch and feel just to have a look at it before you buy that. I think branches are pretty much going to be in a similar mode where they're going to be supporting customers who are going to be primarily dealing with the bank through again the mobile interface. And in case they have any issues in the mobile interface, or if they want any clarifications, they might come to branches. So I think that's the fundamental redesign that we're looking at. The second part, of course, is that when we look at India, we always say that India lives in the 19th, 20th, and 21st centuries simultaneously. Now, therefore, when we talk of digital, while it is true that maybe today 60-70% of our customers interact with us through mobile banking primarily, but nevertheless, a digital divide does exist. Not all our customers can actually interact with us through digital. Particularly in the public sector, we are very proud of our role in financial inclusion. Just to give you an example again, BOB has about a 6% market share, but our market share in Jan Dhan accounts is 17%, which means 3 times our market share in the banking system, which is possibly the largest contribution, again, any bank makes proportionate to its size. Now, these customers are equally important for the bank. If you look at the total customer count, out of about 130 million customers, 50% again are FI customers, 50% are non-FI customers. And for these customers, it is not digital which is important, it is assisted digital which is important. And that is where our BCs and business correspondents come in. So when we started off or entered COVID about 2.5-3 years back, the proportion of our BCs to branches was about 2:1. We had about 9,000 branches, 18,000 BCs. Today, we are on the way to making sure that about this proportion is about 5:1, that we should have 5 times the number of BCs as compared to our branches. Now, this is important for 2 or 3 reasons. A, branches are a very expensive channel, right? B, we saw during COVID that when the government wanted to push money to the Jan Dhan accounts, the branch network was completely inadequate. And it was BCs which were open at 6 o'clock in the morning to make sure that money reached the accounts and was distributed to the people who needed it at that point in time. So therefore, to my mind, along with digital, the second important channel, which is again going to become probably more important than the branch channel, is going to be the BC channel. A large percentage of our customers are going to be serviced through digital channels like phones, but the other largest proportion are going to be serviced through BCs, which also you can argue is an assisted digital channel. Ultimately, what is a business correspondence? They use a handheld device, which is basically like a mobile phone, to make sure that any transaction which a customer wants to do is enabled at the doorstep of a customer. So this is also digital, but this is going to be assisted digital. So to my mind, that is the second important lesson for us, that because of digital divide, digital cannot be only in service mode, self-service mode, it will also have to be in assisted mode, right? So now we have 3 main channels, which again will be powering banking for us over the next few years. A, it is going to be digital. B, BCs. C, branches. But another thing that we have seen in the last 2 or 3 years is that economic changes are afoot throughout the world, because of which, again, in some ways, income distribution has got even more skewed, which means that a lot of people, again, have actually benefited in economic terms from the changes that happened through COVID. The number of rich people, people who have a disposable surplus, has also gone up. And therefore, when banks plan for the future, the fourth leg of the distribution channel has to be, how do you reach out to the HNIs, right? And that is where wealth management products and wealth management channels become very important. Today, BOB is in the process of recruiting 500 wealth managers, because we recognize that that's an equally important part of the franchise, which must be ring-fenced and which must be serviced. So therefore, just to summarize again the points I've made so far, we need to have 4 vibrant channels to service our customers tomorrow. A, of course, the branches, which have always been the centerpiece, but along with that, with increasing importance, mobile banking, BCs, and also feet on the street, wealth managers who can go and interact with customers to make sure that they give them the best possible service. Going forward again to products, right? So another thing that we have seen is that the digitalization has enabled a total change in terms of products and in terms of how you deliver those products. So just to take an example of a car loan. Now, a car loan, we used to again look at a car loan 5-7 years back. Very frankly, there were 2 metrics that you would see before you said yes or no. One would be that what is the salary of the customer, and therefore what is it as a multiple of the EMI. And 2, you could again, in order to decide on the rate, look at the credit score. But that was the sum total of the appraisal process when it came to a car loan. Today, when you do a car loan, because of so many proxies which are available, you don't even need to have the salary of the customer. There is enough data which is available, which can actually let you know what is the buying power of the customer. You can also look at the credit record of the customer through patterns, through his account with you, or indeed through fintechs in terms of how the customer's behavior is in terms of the various other financial transactions that they do. In terms of financing the vehicle, you can also take into account what is the wait time for the vehicle, right? Because at the end of the day, if the loan was to go bad, you might want to repossess it, and the value of the vehicle would depend upon what is the premium that is there on the vehicle. Today, there are vehicles which actually have a waiting period of 2 years. So if you were to give a vehicle which has a waiting period of 2 years to a customer, probably again, you are very safe, because again, the resale market is going to be very high. You could also again look at the resale market indeed in terms of a 3-year-old car, what of that particular brand and that particular model, what does it get you in the market? And based upon all these inputs, and also possibly even geography, depending on the geography, you could actually think about the propensity of default of a customer. So all these data are actually real-time data, and they can be accessed in the matter of seconds, so that you can able to make an offer to a car loan customer based upon his likely credit record, his likely propensity to default, the quality of the vehicle that he's buying, what would you be getting if you were to sell off the vehicle, and all this can be programmed and arrived at in a matter of seconds, right? So so how you again devise a product, design a product, deliver a product has changed dramatically over the last few years. Similarly, again, Mr. Das would remember that when we used to do MSME loans, we used to struggle to do renewals. The balance sheet was very often 12 to 18 months old, and the basis of a decision making had actually nothing to do with the risk. In 18 months, COVID would have come and gone, but you were still looking at a balance sheet which was 18 months old. Today, when you do MSME loans, you actually have a totally different set of data sources which are there. You have GST data, which is actually real time. You know what is the kind of sale that your MSME client made yesterday. So I think in so many ways, technology, how you design your products, everything has changed just because of the digitalization and the access to data that you have received. Then coming to technology, which of course underlines digitalization, but which is impacting us in so many more ways. First, of course, are the obvious ways, right? We talk in terms of cloud computing, how banks can move so many applications to the cloud. But apart from that, to my mind, there are 2 central changes which technology implies. First of all, it has opened up enormous possibilities of collaboration. Today, a bank need not do everything itself. You have got a variety of partners, NBFCs, fintechs, who can actually work with you to make sure that you are able to deliver service to your customer at a much lower cost. So therefore, to my mind, as we go forward and as we look at our own workplaces, I think we need to understand, fully explore, and fully exploit the scope of collaboration which has been enabled by technology. The second is it has led to a lot of democratization. We used to always take, in State Bank at least, a lot of pride in being the largest bank in India. But actually today, the fact that you have got branches in all corners of India has become less important because of the democratization that technology has brought about. Because of the partners that I mentioned, even without having branches, you can have access to customers through a variety of partners, right? Technology means that you might actually, as an old bank like BOB, be saddled with technology which is old, and new incumbents might actually not have that legacy disadvantage and may have access to technology and technology as a service, which means you need not even make the kind of investments that we legacy banks have made in the past. But most importantly, it also has meant that this democratization has meant that the control is going to increasingly pass into the hands of the customer. We talk of open banking. This is already something which is a reality internationally. And now with account aggregators coming in, it will be the customer who will decide that who is given access to that data and who is the institution or entity which is going to service their needs. So therefore, if as banks, we believe that we are the masters of the universe, that we actually have control over the customer. We decide what the customer wants. We decide when to give that to the customer and where to give that to the customer. That time is long past. Increasingly, in a matter of years, the control is going to be completely in the hands of the customer. And therefore, it is incumbent upon us to make sure that we are fully prepared for the time. Not only do we, of course, we have advantages of incumbent, you might have goodwill, but you cannot take the customer for granted. You need to make sure that every time you have the best possible product, the best possible service, only then you will be able to retain the customer. Fourth is in terms of risk management. Ultimately, you can almost argue that what distinguishes a bank from another is again how good they are at risk management. And that is where again the changes of recent years are a double-edged sword. On the one time, it has enabled risk management. Risk management can be real time. You can actually see almost on a real-time basis if things go wrong anywhere. But equally, it has also meant that there is a greater risk in terms of single point of failure. When 70 to 80% of your customers, 90% of your transactions are interacting with you, say through mobile banking or any single channel, the chances are that if things go wrong, they'll go wrong dramatically. And this is something that we have seen internationally and also in India, where any failure can get enormously magnified. Therefore, again, it brings to home the importance of operational resilience. We must make sure that even as we digitalize, even as we embrace technology, we never lose sight of the fact that the fundamental thing that the customer expects from us is continuation of service. When I go to your mobile banking channel, it should work. When I go to your ATM, it should work. When I go through your internet banking, it should work. Whether you have got 200 services or 150 matters less, but operational resilience matters much more. And therefore, when we design our risk management, operational risk will become much more important. Over the last few years, we have given importance to credit risk, understandably, because credit risk came and bit us very badly over the last 8 to 10 years, particularly in corporate banking. But for the next 10 years, what we must again prepare for is to see how again we can handle operational risk, because the changes that are happening and that will happen in the future. That brings me to the last again point in terms of the impact of the changes, digitalization on banks, and that is on HR, which is of course so close to our hearts. As I began, I think the fact that all of you are attending this program and the fact that IIBF has gone beyond again the kind of programs we had when we again had joined the bank, when the CAIB used to be the gold standard and the end all in life when it came to training. The fact that the IBF again feels that's important, that we need to groom the leaders of tomorrow is key. Because as I said at the beginning, it is for you to make sure that you identify the challenges which are going to be there every day, make sure that we also fashion the appropriate responses. Also, I think it's very important to understand the implications in other terms for HR. for instance, in terms of numbers, right? So I think it no longer will be important or necessary for us to be doing routine tasks. And the way banking has been routine, and also what we do by way of transactions in branches, has been a very important part of we do. But it is becoming increasingly less important as we go ahead. So therefore, the questions that we need to ask for ourselves is that when we recruit in the market, what kind of recruitment should we be doing? When changes are going to be so fast, can we really recruit for the next 30 years? Do we know what are going to be the requirement for the next 30 years? Can we commit to say that we'll take on employees and have them for 30 years? I think these are going to be all questions before us, right? In terms of numbers, what are the kind of numbers we should have? So already in BOB, post-merger, we have not made any recruitments for the next 3 years, for the last 3 years, right? We have lesser number of employees today as we had 3 years back. And I believe that is going to continue in the future. In fact, Mr. Das would, and this is nothing which is new. Mr. Das would recall that when we joined SBI in 1987, SBI had at that point in time something like 220,000 employees, right? Today, after the merger of all the associate banks, which were about 1/3 the size of SBI, right? If the numbers had remained constant, we should have had 300, maybe about 300,000. Today, I think SBI has something like 250 or 260,000, which means despite, again, the fact that the branch network is 3 times as large as when we joined the bank, right? Despite transactions have gone up 100 times, despite maybe having 50 times the number of customers, the number of people working in SBI is in absolute terms lower. And this trend is going to accelerate as we go forward, because it took a long time for us to actually move from those ledgers and clean cash and interest application to, again, core banking. But what we are seeing today is what you see very much when you go to the airport, where the airline actually expects that you will bring your printed boarding pass, where you will actually go again to the luggage counter, print out your own luggage tag, attach to the luggage tag and put it on the belt. And that is how we are looking at banking also. We expect our customers to be doing pretty much everything that we did for themselves, which means that the numbers that are going to be required are going to be much lower going ahead as compared to today. So there is a challenge in terms of HR, in terms of planning for numbers. There's a challenge in terms of recruitment. There's a challenge in terms of training, because not only will we not require the same number of people are going to be freed up, and we will need to see how do we retrain them for things that we require them to do tomorrow. And of course, ultimately, the most important piece is talent. IFBF is doing a great job to, again, train all of you for the challenges tomorrow. But today, no organization is self-sufficient in terms of talent. I think it is one of the biggest tragedies of public sector banking that public sector banks were only providers of talent. They never again had either the possibility or the humility to absorb talent from outside. But to my mind, that is something which is important, not only because there are skills which lie in other banks, but also because there are skills which lie in other industries. There's so much which is becoming enmeshed together in terms of customer service. Possibly you can learn as much from the hospitality industry or from the airline industry as you could from customer service in banking. So therefore, to my mind, one of the biggest challenges is going to be talent management, and also making sure that our pool of talent goes not only outside our institutions, but also outside our industry. But again, let me compliment on IFBF on doing a great job in terms of opening your minds to the challenges of tomorrow. And I'm sure all of you will become great leaders of your banks as you go forward. So best wishes to all of you.
Thank you, sir.
Thank you, sir.
Thank you. Thank you.
Thank you very much, sir.
Wonderful speech.
Thank you, sir.
Encompassing the banking industry and how future looks like. At times it looks a little bit scary, but it is also better to know at the beginning. So this floor is open for, I think, the participants. So much things are left with you in so little time. Food for thought.
Sir, may I ask a question, sir?
Yeah, please.
Yeah, good evening, Sanjiv, sir. Good evening, everyone. Sir, very good thought process on the business strategy. So my question is, we are doing a lot of digital transactions in the banking, but most of that is being dominated by the fintechs. The fintech, we are even logging into every customer is logging into fintech and they're using our bank account only. So where is that we are getting this gap? Why as a bank we are not able to give the same facility as a user friendly to the customers?
So I think what you are saying is very correct. And the one area where, again, fintech, or rather you might call it big tech, has acquired a dominant position is in terms of payments. So large proportion of the UPI payments actually are originated through big techs, the Google Pays and the Phone Pays and the Bharat Pays of the world. I think that's probably a lesson to all of us, that how fast change can be. And from just in maybe 5 years, from having a dominant position in payments, banks as an industry have been marginalized. But nevertheless, I don't think there is again any reason for us to despair or again feel insecure, because as I said, the world in which we live is one of collaboration, where nobody is going to be able to do everything. Everybody again will do what they are good at. And banks are good at some things. Banks are good in terms of, again, risk management. Banks are good in terms of getting the trust of customers. Banks are good in terms of gathering low-cost deposits. Banks are good at managing regulatory risk, which is why recently the RBI also came out with guidelines when they said again that when we talk of fintechs, they will need to be guardrails, and fintechs cannot, again, for instance, underwrite loans like BNPL under the guise of, again, saying that, look, I'm just enabling last mile access and I'm not charging anything, right? So I think over a period of time, my own sense is that it will become a more level playing field. We have seen a lot of advance of fintech, which is very good, but increasingly there's going to be a complementarity of relationship. But of course, the challenge is that if you are going to collaborate with fintechs, if relationship is going to be complementary, then it is important that you actually have the wherewithal to collaborate. Unless you have the technology backbone, unless you have, again, your digital processes set up, ultimately the fintechs will collaborate with whatever bank is able to best collaborate with them. So that does not diminish the challenge for us, but to my mind, it does not at least create an existential challenge where banks as a category are threatened. I think banks as a category will remain central to the financial system. And I think the fact that the Reserve Bank of India is so keen on making sure that the financial system remains stable will mean that banks will be the primary agents. But that still puts the onus on us to make sure that we are in a position to collaborate, take advantage of the changes that have happened, and make sure that all these things ultimately result in better service, lower cost for us, and better quality of output for our customers.
Thank you, sir. Sir, one more question, sir. Business correspondent, we are having this strategy for years together now for all the banks, but it's really not come up on board as expected due to many of the regulations or maybe controlling points in the problem. Can this be replaced with a digital kiosk concept? Will that help the banks to get into better penetration?
So I think two parts. As I mentioned earlier, that while digitalization is something which is going to increase by the day, we cannot ignore the fact that there is a digital divide. There is a customer who needs help in order to access a digital channel, which is what a digital kiosk is, right? And that is what a BC is able to provide. Even when the government announced DBUs, which again will be inaugurated soon, ultimately, what is a digital banking unit? It is basically a unit which is digital basically in terms of delivery. You might be having ATMs, cash machines, passbook printing machines, account opening machines there, but ultimately there'll be one or two people who will be there in that DBU to make sure that the customer is helped in making it possible. So when even in an urban setting, you need in a DBU basically an assisted model where there's somebody from the bank to help customers. I think the day is very far off that where in our rural areas, we might expect customers to be able to do everything themselves, which is why BCs is very important. The second part, of course, is that in terms of transaction cost, the transaction cost through a BC as compared to the same transaction to a branch. Say a customer wants to withdraw 500 rupees. Now, if he goes to the BC, the cost to the bank might be 1/20th as compared to servicing the same customer for the same transaction in a branch. So it is in our enlightened self-interest that every transaction that can be done by a BC is sent to a BC, right? And this is what, again, we try to do in a bank, to actually make sure that all transactions that can be done by BCs are migrated to BCs, because it is a much more lower cost business model. Number two, we talked of the world which is changing. So we do not know what is going to happen tomorrow. When you do not know what is going to happen tomorrow, you try to make sure that your business is designed in such a manner where you do not commit in terms of fixed cost, right? So what are fixed costs in the bank? The fixed costs in the bank are our branches. Once you hire a branch, you are pretty much stuck there for the next 10 years, right? The fixed costs in a bank are our people. Once you hire somebody, you are going to have that person for 30 years. But a BC, again, gives you a scalable model and a flexible model, which means tomorrow, if you find that your customers, say 5 years from now, are able to do the digital transaction themselves through banking kiosks, as you have suggested, in that case, you can scale down BCs or make BCs do something else. But that may not be as easy to achieve through a branch channel. So therefore, to my mind, given where we are in our development journey, given the profile of our customers, as I said, 50% of BOB's customers actually are Jan Dhan account holders. I think the BC model still remains a very important channel to make sure that we are able to deploy our resources optimally, have low transaction cost, and have a flexible and scalable model.
Thank you, sir. Thank you very much.
Sir, I have one question. What steps bank need to handle risks emanating from the climate change? Because RBI has also come up with a discussion paper in which they have sought views from various banks and financial institutions, and 3rd October is the last date to submit the what bank should take to mitigate risks arising out of climate change.
So I think there is no doubt about it that the risk of climate change is here and now. But in so many ways, how urgent it is for us and what is the kind of action that we might need to take also depends on the kind of situation you are in. So there are countries which have committed to achieving net zero by 2035 and so, right? India again recognizes that given our stage of development, we will have a more gradual journey in achieving net zero. So the government of India has committed to 2070 as the time when we will achieve net zero, which means for us, the time of transition is going to be a little more gradual, a little more elongated as compared to some other countries. Now, this of course gives us some comfort that the transition that is going to be happening will be at a pace at which we can possibly handle the transition. But there will be areas which actually could be impacted much faster. For instance, again, climate change could mean that cropping patterns could change. Climate change could mean that some of our export sector could get impacted much faster as compared to certain other parts of our industry. Because it's quite possible that while even we might be having a transition which is slower, the buyers of our exported goods might decide that in order to meet their net zero goals, they may only want to purchase goods from companies which in turn have inputs which are based upon a net zero goal, which would mean many of our MSMEs which are dependent, which are oriented towards exports. And I think it's important to remember that 70% plus of our exports are through MSMEs. Now, many of our MSMEs actually could get impacted much faster. The third part again is that while large companies already are preparing for the impact of climate change, but the MSMEs again, I think are even more vulnerable. One, because of their dependence in terms of who they supply to, whether in India or abroad. And two, also because they simply may not have the capacity to see far enough in terms of how the impact is going to be over the next 5 or 10 years. So to my mind, as banks, that is one sector we should focus on, that which of our MSMEs are might be impacted faster. What can we do in terms of helping them combat this challenge? What changes in technology might be required? What changes in product design might be required? I think that is something that we probably might need to work on urgently, because ultimately banks are nothing in themselves. The health of banks depends upon the health of their customers. And if a large proportion of their clients, whether because of change in agricultural patterns or because of change in terms of how buyers of MSMEs perceive climate risks. If they get impacted, the banks will get impacted. So I think there's an urgent agenda which is there. But otherwise, if you're looking at as a country as a whole, probably again, we might be a little better placed as compared to some other countries.
Thank you, sir.
Sir, Bank of Baroda in the recent years has embraced many challenges, radical challenges, changes, forward-looking changes, I should say. What is your view? How these changes are benefiting the bank? And what is your advice to fellow PSBs who are yet to start or yet to think about such changes?
So I think, thank you very much. I think we touched upon some of these issues during the course of the last half an hour, 40 minutes. So as we discussed, the biggest change that is happening is in terms of the impact of digitalization and the fact that the channel of choice for customers has become the mobile phone. And it's not a surprise, right? For all of us, we used to read newspapers. Now we look at news on a real-time basis on our phones. You watch cricket matches, you watch television serials, Netflix, all on your phone. So it's no surprise again that your customer also wants to do banking on the mobile phone. So therefore, again, having a good grip in terms of making sure that your mobile banking channel is able to provide almost everything to your customer is very important, right? For us, again, we made this transition about a year and a half back when we launched Bob World. And within 1 year, we today have got something like 22 million customers on Bob World. So that is about 40% of our non-Jan Dhan account customers. In private sector banks, about 50 to 55% of their customer base uses the mobile banking as the primary interface. So I think that is the first big challenge which is there for all of us. How soon can we make sure that we have a mobile interface which is robust, which is comprehensive, which is dynamic, which is user-friendly, and then how soon can we migrate our customers to that mobile interface, right? That's something which is very important. So that almost has to be one thing which is almost 50% of the agenda for a bank, that how do you make sure that the customers are using mobile interface as the primary interface of the bank successfully. The second part, again, to my mind, is what we discussed in terms of talent. So public sector banks, because of the fact that we always were dependent upon homegrown talent, are deficient in some areas which are not the strength of public sector banks, right? I talked about wealth management. That has not been our strength for the last very many years. And if therefore we say that we might want to do it from scratch, it may not work best. No, the world is not going to wait while you develop your capabilities. So therefore, having the humility to recognize where is it that we are lacking, and also having the capability to attract talent from outside the bank to build those businesses is very important to my mind. I think if I were to recommend two agendas for public sector banks, these would be the two. One is, how do you make sure that more and more of your customers use mobile banking as their primary interface with the bank? And B, how do you make sure that you are able to attract talent to build businesses and to fill in skill gaps which are there in all banks, including us?
Good evening, sir. This is regarding the HR issues post-merger, the one thing. And the second thing, the balance sheet size of our banks after post-merger. So we need more mergers of big banks now for getting to the international level.
So I think one is, of course, the mergers were important because there is no point in having 20 banks who do the same thing in the same way, right? So even when a company designs its products, you would want to have product differentiation. Unfortunately, the product differentiation between public sector banks was minimal. Therefore, mergers were important. I think it has worked out well also. But I don't think that for the primary purpose of mergers was or can be size. I think size is becoming, as we discussed in the last 1 hour, less important. It is far more important, again, to be efficient, to be customer friendly, to have good risk management, to have good digital outreach. I think that is something which is much more important. Size in terms of branch network, size in terms of number of employees, size in terms of customer base is not the most important thing. So mergers can still, again, be something on the agenda, but to my mind, they need not be driven only by size.
Good evening, sir.
One
Sir, I
question is
just wanted
posted in the
to
chat
state
box.
one or two things that just can I
Yes,
go ahead?
Yeah, Rajat, you can.
One question is posted in the chat box. Madam Geeta
Yes,
Ravishankar
sir.
has posted, how are the banks are going to face the outsourcing risk?
Thank you, sir.
Okay, thank you. So I think what you have touched upon, Geeta, is very, very fundamental. When we talk about collaboration and when we talk in terms of having partners to build the bank of tomorrow, very obviously outsourcing is another aspect of the same development, which means that outsourcing risk becomes very, very critical. Now, how do you handle that? I think there will be a variety of ways through which banks will address that. One, of course, is it might be that when you choose an outsourcing partner, you might again want that for key functions, you might want a degree of control over that outsourcing partner, right? Now, that is something that can be achieved in a variety of ways. One, for instance, again, a lot of banks, again, which have outsourced, particularly internationally, they have their own outfits in India, which do a lot of business for them, right? So you would be aware of Citibank and Bank of America. All those banks have outfits in India. So if you have outsourced to an outfit which is controlled by you, in some ways you can control the outsourcing risk very well. Even amongst us, there are some banks which have already done that. For instance, BOB has got something called Baroda Global Shared Services. So this is an outsourced outfit which does a lot of things for us. That is wholly owned by us. And therefore, we are able to make sure that we do the hiring. We are able to have, again, a lot of flexibility because it is outside the bank. But nevertheless, the risk that comes from outsourcing gets controlled there. So that's the second way to look at outsourcing risk. The third thing which might happen again is that just like we talk in the West about near sourcing, right? That things which were outsourced earlier, now you want more control over them. So now you are near sourcing them rather than outsourcing them. Similarly, banks might also decide that for some activities which have become so critical, you might want to actually reverse the outsourcing and insource them also. The fourth piece again is that you might want that the partnership actually has some other control mechanisms. It could mean equity ownership. It could mean, again, a position on the board. So I think the point that you have made is very, very fundamental. And when we look at the partnership model, when we recognize that banks are not going to be able to do everything, we will have to, again, make sure that for controlling the risk, we arrive at the right model.
Sir, good evening,
Thank
sir.
you, sir.
Good evening, sir. I'm Manish, working in Union Bank of India. One question I want to ask, sir. In the recent time, we have seen that RBI has continuously kept on increasing rate of interest to contain the inflation. Don't you think that the present inflation is more of a supply side rather than the demand side? Or it is not only the way to contain the inflation? Because usually due to the COVID load, a lot of factories are being closed. So are not we are focusing to the only one point, just increase the rate of interest and you just supply, control the demand and just not taking care of the supply side? Because higher rate of interest also affect the credit offtake. I want to know your views on this point, sir. Thank you, sir.
Thank you. So I think it's a very, very good question, but very frankly, I think Mr. Das will have to invite somebody from RBI to answer the question, but I'll give you again a banker's perspective to that. So I think what you're saying is right, that at least in the initial stage, because of the disruption that was there on account of COVID, a lot of inflation was because of the supply side factors, which is why central banks around the world actually saw through and preferred to ignore this inflation for quite some time. But then again, there's something called inflationary expectations. And central banks realize that once inflationary expectations becomes entrenched, then in that case, it becomes doubly difficult to control the inflation down the line, which effectively means this, that in case you believe that prices of the car you want to go are going to rise by 15% this year, you will buy it this year rather than next year, because you know your salary is not going to increase by 15%. which will create more demand and which will in turn create more inflation, right? So it becomes a self-fulfilling kind of a prophecy. So I think the central bank recognized that, and therefore, possibly belatedly, because everybody shared your diagnosis that the supply side factors are more important, thought again that it might go away, but has not gone away. The second thing I think we need to realize is that interest rates were at unnatural levels. When the COVID crisis happened, they were cut down dramatically, more so in the West as compared to India. And ultimately, if you look at stable interest rates, then stable interest rates are where you have positive real rates. In India, with inflation, which is 6-7%, right? And repo rate, which was say about 4%, you actually had significantly negative interest rates. So what we are seeing is also a normalization of interest rates. Interest rates are coming back to where they were before COVID, right? So therefore, it is not that we have seen a precipitous increase in interest rates, only it has happened in a short period of time because central banks perceive that they are behind the curve and they need to move ahead of the curve. So therefore, and that is the reason why I believe that as things stand today, there may not necessarily be a very big negative impact in terms of demand, because what you are seeing is pretty much the normalization of interest rates. So to my mind, there are the three parts of the answer. This is the normalization of interest rates. It is something which was necessary to control inflationary expectations, and the impact on demand should not be very serious.
Good evening, sir. This is N.K. Das.
Mr. Rajat, you can ask your question.
Yeah, good evening, sir. I think Manish has asked the question what I was about to ask about this increasing rates, but I wanted to know from Sanjiv sir that as MSMEs are the backbone of India, what Bank of Baroda or banks should do to improve their position, as in the increased interest rate scenarios, they are already feeling the pain. In the last 2 years of COVID, they are finding it difficult to come on the track. So what should be done to improve the condition of MSMEs, as they are good employment generator also for the economy? Thank you, sir.
Thank you. So I think there are two parts to the equation. One, as you say, they are a very important part of the economy, the largest creator of employment, the largest source for exports, and therefore, unless the MSMEs are able to grow, the economy cannot grow, right? And similarly, also from a bank's perspective, in terms of having some kind of positive yield, because large corporates are able to get very, very fine rates. The MSME sector is very important from that perspective also, as a business also. But there have been, you might say, two challenges. One is that we have seen, and particularly in public sector banks, that the performance of our portfolio has not been very good. Most banks have got double-digit NPAs when it comes to the MSME sector, right? So that's one part which is also there. Second is that there has been a bias in terms of our lending to very small MSMEs, and we have actually lost a lot of the mid-market. Third, again, has been that the market has changed, but we have not been able to change our appraisal methods the way the market has changed also. And I think we need to address all these three things, and they are related. So as I was talking in the when we spoke about MSMEs and the impact of technology, today the kind of data which is available to us is very different as compared to what it was earlier. This means that you would be able to react much faster to the requirement of MSMEs. You need not again ask for all kinds of questions, ask the customer to come 20 times to the branch to assess their loan. There is a lot of data which is available, and there are a lot of fintechs which allow that data to be available to you, through which appraisal can be much more efficient. Number two, since it is real-time data, the quality of underwriting can be much better. And right, so that's something which is important. Third, it is important that we recognize that MSMEs also need to grow to scale in order to remain viable enterprises, right? Which is why the government also increased the limit in terms of investment in plant machinery and sales for MSMEs. So I think this is something that we also need to focus on. Make sure that our underwriting methods change. They are based upon real-time data. We are much more faster in terms of responding to the requirements of MSMEs, and also we are able to address the growth requirements of MSMEs. right? If we are able to do that, to my mind, it is still possible to do these loans well and to make money and to support the sector.
Thank you, sir.
Sir, sorry, I'll just budge in. So I work for an S Bank as a senior vice president. So we, in fact, look at the MSMEs, loans with the more important than the large corporates.
Yeah.
So all the banks today been, moving into the retail perspective rather than large corporate loans. Okay, then is that the end use tracking of a MSME loan is a problem for this, higher NPA percentage, sir?
So I think there are two ways to see it. Look, we always saw end use as the holy grail. मैंने आपको पैसा दिया है, आपने have you used it for productive purposes? I think that time when we actually would think that we are going to determine how the company does its business are gone, right? The MSME needs money to do their business. It is for us to make sure we assess the needs well. It is for us to make sure that real-time data is available, which we are able to monitor, right? It is for us to make sure, again, that we calibrate the finance to the needs of the customer. But only, again, say that I want to ensure the end use of funds, I don't think that time is there. And that kind of nanny banking possibly something that we cannot do today.
Good evening, sir. This is Chadha, sir. Sir, as you said, sir, India lives in 19th, 20th, and 21st century simultaneously. Also, you said that the Bank of Baroda is having almost 50% of the account holders as Jan Dhan account holders. So, in this situation, sir, how you are finding or how it is challenging to onboard these customers on digital platform?
Yeah.
What are the challenges that you are facing?
Yeah. So, I think this is something which we discussed touched a little bit earlier. So look, the fact is that what is it that you cannot do? You cannot be servicing Jan Dhan customers through your branch network. That is an impossibility. A, because your branch network is never going to be wide enough to service them. B, it is too high cost model. C, you cannot also service those Jan Dhan customers through your digital channels immediately because they may not, again, we know again that today most of our digital channels, mobile banking, work through smartphones. And for our Jan Dhan customers, even if they have phones, they have feature phones, right? So therefore, again, the logical corollary is it is the BC model which becomes central to servicing Jan Dhan customers for reasons of outreach, for reasons of cost effectiveness. As I mentioned, it costs a fraction to service a customer through, again, a BC as compared to a branch, right? You pay a BC for a transaction the BC does. Your branch costs you the same, whether a customer comes to the branch or not, right? So therefore, again, for a long time to come, to my mind, the BC channel is going to be as important as your branch channels in terms of servicing customers. And for Jan Dhan customers, it is going to be the primary channel.
Sir, I have a question. So the UPI transactions on the digital banking side, so UPI transactions have significantly increased. Recently, we have crossed 6.3 billion transactions. Overall value is about 10 trillion in terms of INR. Now, there is a cost involved in this UPI transaction, which currently the banks or most of the stakeholders are bearing, which works out to be about 0.25%, which is 2 rupees for every 800 rupees spent. This is as per the RBI data. Now, is UPI will be a loss-making proportion for most banks, except for certain banks who have partnership with these payment service providers, like say SBI with Google Pay or HDFC with Google Pay. Few banks have partnered with Phone Pay like that. So because these are very major, most banks in India are not partnered with PSPs. Now, is this a loss-making proposition? Is it acceptable for the banks, or do you feel that these transactions needs to be charged? Maybe because people are now used to it now. What banks think about it?
So I think this is an issue on which the RBI brought out a discussion paper 3-4 days back, and then the finance minister also commented on it a day back. So I'm not sure whether it is for me to add to the discussion, but let me again say that at the end of the day, you cannot change the direction of travel, right? As a bank, as a player, you cannot determine the kind of change that is going to happen and the pace of change that is going to happen. What you must see is how can you actually make sure that you make adjustments to benefit from the change. So to my mind, the fact that so many of our customers are using UPI, imagine if they were using only branch channels, right? I don't think our channels would have had the wherewithal to handle that kind of challenge. So the fact is that all this has brought a lot of enablers also in terms of digitalization, customers becoming digitally savvy, increased cost of transactions. You're right. It is not a level playing field, and there is a net cost which is there. Now the question is whether we can still profit from that, either in terms of the data which is available to us, and therefore say target the right product at the right customer. If today the customer has made a UPI payment again to buy an X product, can you tomorrow again offer him a loan for the same kind of product? So I think probably we'll need to look at things more constructively, because that very frankly is the choice which is left before banks. Banks have been out-competed by big tech when it comes to payments. That is a reality. And we must see how we adjust to that reality. Tomorrow, of course, if it is possible that banks are to some extent compensated for the investment that we are making in terms of systems to make those UPI payments possible, I think it is all to the good. But even while that happens, I think there's no point cribbing. It is more important to see what we can do in that particular environment.
Thank you, sir.
Sir, good evening. Prakash here. Sir, you talked about open banking. Now this is again a transition from digital banking to open banking. So large part of our demography is not so tech savvy. So what are the challenges we face in future regarding that technology frauds that are happening today?
So I think the fact is that transition ultimately is going to happen, but it is not something, even when it comes to open banking, which is going to happen overnight. Even in open banking, ultimately the customer has to authorize, right, positively for some other entity to use the data that belongs to the customer with the bank with which they bank. And if the experience again of what has happened abroad is, and open banking was introduced in Europe about maybe 3-4 years back, it is not something that is impacting the ecosystem on day one. What is important is that we take it as a positive impetus for making sure that we are prepared for the change which is going to come, right? We could, of course, sleep at the wheel and say, look, the impact on us is going to be only over a 5-year period. But the direction of travel is clear. We know where we are going to end up. So it's important for us to make the right investments and also to be fully cognizant of the challenges it might imply. For instance, open banking means that my customers can be accessed by some other bank, but it also means that I can access the customers of another bank, right? So it's important to make sure that I always have my eye on both things. How many customers am I able to acquire through open banking, and how many of my customers are being accessed by other banks? I think the lesson for us is that the direction of travel is clear. The change is going to be with us. We just need to make sure that we make the right investments and we have the right orientation to recognize the change, and if it is possible, to profit from the change.
Good evening, sir. Sir, when we are advancing credit, we are taking into factors various things, but at the same time we have to have our market share increased also, and so when with the digital banking, changing digital banking technologies, so whether we have to concentrate on top line or bottom line of the bank.
So at the end of the day, I think it is always going to be a balance that you need to strike. But if you were to ask me that between the two, what is more important, I would always say bottom line is more important. We no longer live in a world where capital is available on the tap, right? A private bank needs to deliver return on capital in order to access the next round of capital financing. To generate return on capital, bottom line becomes important. For public sector banks also, the government has very clearly indicated that, look, the time when you could tap the government for capital are gone. So therefore, again, we must also use the capital markets as the primary source of capital for us. If we have to access the capital market for primary source of capital, in that case, we must make sure that we keep in mind that our return on asset is decent, that we're giving a good return on equity. So therefore, to my mind, if a choice has to be made in today's world, the bottom line becomes much more important than the top line.
Thank you, sir.
Good evening, sir. Myself, Abhishek Pal from State Bank of India.
Yes, Abhishek.
Yeah. Sir, as you said that in banking scenario, many things are going to change drastically in coming future. I need your guidance and support that how as an employee we can proactively prepare ourselves so that in coming future of time we will be more ready and prepared for to cope up with those changes. What are the things we as an employee we can do?
So thank you, Abhishek. I think you are doing the most important thing that an employee must do, which is to keep current, keep on upgrading your skills. And by choosing to invest your time in this program, you're doing exactly that. So I think you have taken the most important step that an employee must take again in today's world. But equally, again, I think even apart from training, there are some things that we should always keep in mind. That we have to realize that everything that happens around us, whether it is in the economy or in the society or in politics, everything impacts the bank in some way or the other, right? Everything impacts the bank. And therefore, again, if we are to be successful bankers, we must have an interest in everything that is happening around us, right? That is fundamental. We always used to, again, debate whether what is more important, to be a general banker or to be, again, a specialist banker. I think there was a long time when actually specialist banking had become very important. But today, when we look at the world in which we are living, which is changing every day, I think the kind of general skills which are required to be able to address any challenge which might come, I think are equally important. Therefore, I think, again, getting exposure to different parts of banking, making sure that we are fully abreast with the changes that are there, invest in, again, improving ourselves through, again, whatever reading we can do. I think all these are very, very important as we go forward. Number two, I would say, again, that more and more things are becoming transparent. It is no longer, again, possible, again, to shortchange the customer. So therefore, for banks to have a very strong ethical base is very important. Enjoying the trust of customers is very important. Therefore, I think both in our own behavior and also in terms of how we design our institutions to have the highest ethical standards and to sensitize, again, our staff members, that high sense of ethics and also the trust of the customer is non-negotiable is very important, right? Number three, again, it is very important to have a satisfied customer, but equally important, it is important that if a customer is dissatisfied, the dissatisfied customer, again, gets the attention they deserve. Very often, a dissatisfied customer who you have been able to satisfy after that becomes your best brand ambassador. And therefore, again, focusing on customer grievances is something which is going to be very important, because in the day of social media, a good action gets amplified and so also does bad customer service. And I think, therefore, building the brand of the bank is equally important. Fourth, I think technology is something which is important. But for us, I think we need to realize that technology is valuable only if it achieves one of the 3 or 4 objectives, right? A, either it helps in, say, reduce risk on the balance sheet. B, it helps us improve customer service. C, it helps us reduce costs. D, it helps us improve income streams. So wherever you are working, make sure that you are able to look at technology as something that is able to, that you are able to harness to at least do something. Technology for technology's sake is not important, but technology as an enabler is very important. And wherever you work, you will be able to use technology for one of these 4 purposes.
Thank you, sir.
Good evening, sir. This is Rajat Rajodia from Union Bank of India. So, sir, as we are talking about digitization in every field, so what's your view on neobanks? And we say this millennial and all the next generation is opening account with neobanks, and they do not want to open the account with us. So, what's your view on the neobanks and these all these agencies?
So I think these are issues that have been faced in other geographies also, and therefore we can learn useful lessons from what has been the pattern in other countries, right? So you have neobanks like Monzo, which again are very active, for instance, in the UK market. Now, it has not meant that existing banks have got displaced. Banks have reacted different ways. Some banks have, again, spawned digital banks within their own bank. Others have tried to use, again, a sub-brand to make sure that you can appeal to the millennial customer also. In so many ways, again, if you look at, say, YONO for SBI or Bob World for us, it is an effort of creating a sub-brand which is able to address another category of customers. For instance, in Bob World, we opened something which is called the Bob Benefit Bonanza account, where if you open that account, you are basically given largely a digital-only access. If you use branch services beyond a point, you'll be charged for that. But in turn, you get benefits like, say, a Netflix subscription and the like. Now, for us, a very large percentage of customers who are opening that account are actually millennials. So I think it is possible for banks to react to that, not threat, but to see it as an opportunity to be able to access new customers through possibly having either a sub-brand or, again, building special channels which can access those customers. I don't think it is something which really is too much of a threat to us. I think it's a great opportunity, because today, in today's world, even while you have your main brand, it is possible to have sub-channels and sub-brands which can address different clienteles.
Thank you, sir. Thank you.
Sir, good evening, sir. This is Venugopal Reddy from Union Bank of India, sir. Sir, my question is related to the gold loan jewelers, sir. Especially most of the public sector banks are depending on the gold loan jewelers for the uprising of gold and exposing ourselves to the biggest threat in terms of frauds, etc. Sir, what are the challenges it may come if we make our own staff as appraisers, gold loan appraisers, by giving training, etc.? Is it feasible, sir?
So I don't see why it is not feasible, but ultimately any model that you have must be scalable, right? You must be able to, again, make sure that the customer service is not impaired by the design that you have. I don't think today, given the fact that gold loans are being given from almost every branch, and again, you require flexibility, you require fast service, whether we might be able to do it only through our staff members. The other part is, I think we must recognize that even while they are frauds, if you take the frauds and you take the cost which is there in terms of operational losses from gold loan frauds, nevertheless, because credit losses are low in gold loans, even then, if you take them into account, the overall loss ratio as far as gold loans is very, very low. So remember, whenever we look at risk management does not mean that you eliminate risk, because the cost of eliminating risk is going to be disproportionately high. You only try to mitigate the risk and make sure it is at a level which is acceptable and gives you a positive rate of return. To my mind, gold loans for all of us, despite these risks, are giving us a positive return on capital. And therefore, let us not, again, tinker too much with the model which is working well.
Sir, now we have...
Thank you very much, sir.
Yeah. We have already consumed a lot of time.
One question you can take here, one or two, which is written here. Incidentally, a good question is account portability.
Yeah.
In the context of digitization accepted by the customers, can we think account portability in your future?
So in so many ways, when we talk of open banking, right, it is another side of the same equation. I spoke to you how we are going to see democratization, and democratization would mean that control passes from the hands of banks to the hands of the customer. And account portability also could be something which is possible. As incumbents, we'll always feel a bit uncomfortable about it, right? Because we might feel that it is something that will actually result in loss of business for us. But again, I would say, think of it again as something that is going to happen in the due course of time. The customer is going to be in control. The customer will have the choice, and the customer will make the choice. And therefore, to prepare ourselves again for that world is very important.
Right. Mr. Rajesh, I think climate, Mr. Chadha has already touched upon. You are asking regarding ESG, how relevant it is in the banking sector in India.
Yeah. So I'll just make a small point there. ESG is ultimately three things, right? It is environment, it is the social impact, and it is governance. Very often we concentrate on the E, but we actually ignore the S and the G, which are equally important in banks, right? I think the social piece is equally important, particularly in banks like ours. The biggest, you might say, social deficit is the number of female employees in banks. In BOB, amongst our staff, 27% are today women. I'm sure every day this number is going to increase. It's important for us to create the right work conditions where, again, we are able to attract good quality female talent. Just like, again, for a country, they say that ultimately, if you want to increase productivity, the easiest way is to increase the proportion of female participation in your labor force. Similarly, if you want to access talent, I think making sure that banks, again, recognize the immense talent which is there in our female employees and that they are able to contribute that talent is very important. And the third part, of course, is governance. I think the biggest risk that always is there to a bank is from a prima donna CEO, where the CEO believes that he can do anything and get away with anything. Therefore, having the right processes is very important. Making sure that there are no policies which actually allow the CEO to take decisions which are not mandated by the board, and make sure it is a board governed company that is there. I think that's equally important. So ESG is fundamental to constructing the bank of the future.
Thank you. I think, Mr. Mehta, I think we had a very vibrant discussion today.
Yes.
Thank you, Mr. Chadha, for coming here. And I think the way you answer the questions with the specific inputs, I think it will go a long way when they grow up in their organization.
Thank you very much. A pleasure.
So now, sir, today, now this is the last thing which I have to do. It's the most difficult task. And that is to extend the vote of thanks to you, sir. It was such a enlightening session. In fact, our participants must have got the best of the guidance from an eminent banker like you. But much more than we have also got the guidance, sir, for our programs, for our courses, in what way IIBF should shape its courses and programs. I was noting a lot of points from your discussions. And the first thing which you covered actually is our mindset has to undergo a change actually with the current challenges and transformations which are happening. So although we are still living in 20th century, but 21st century's things are just before us, and we have to prepare ourselves for that. So unless we change our ways of working, we look the things in the new perspective, it will be very difficult. So we have to take the learnings from the past, but we cannot just glorify the past. And the loyalties and other things, we cannot take the things for granted. The very right kind of message, sir, you have given. And so the important channels, we have to depend less on the branches, but more on the digital channels and the assisted digital channels, which is BCs. And ultimately, for the high net worth people, we have to have another kind of channel. So everything is a very specialized kind of thing nowadays. We cannot actually do the banking in a general way. Similarly, when we go for our car loans, we go for MSME loans, we have to move away from the traditional styles. Government has also given a lot of emphasis on the account aggregator concept, digital ways of working, the new ways of underwriting, the due diligence, which is now happening actually. Instead of query-based lending, we have to go on to the information-based lending. So a lot of things you have given just in a nutshell in a 1 hour or 1.5 hour session. I think the entire banking, entire gamut is covered by you. And so many questions have been asked by the participants, which have been very aptly replied by you, sir. So we are very much thankful to you to have in our program, sir. And we may trouble you going forward also. On behalf of IIBF, on my personal behalf, we extend a heartfelt gratitude to you, sir, for accepting our request at a very, very short notice. And in this month only we met you, and you agreed to actually deliver a speech and address our participants. Thank you, sir, so much. And we'll be in touch with you, sir. Again, trouble you sometime. Thank you.
Thank you very much. Enjoy what's left of the weekend. Bye-bye.
Thank you, sir.
Thank you so much.
Thank you.
Sir. Thank you.
Thank you, Mr. Chadha. Thank you.
so much, sir.
Thank you,
Thank you, sir. Thank you.
Thank you, sir.
Thank you, sir.
Yeah, thank you all the participants. I hope
you, sir.
this is quite enlightening. The way the bank is moving, the way we should also change ourselves. And you have heard from the horse's mouth.
Yes, sir.
Okay. All the best to all of you.
Thank you, sir. Thank you very much.
Thank you, sir.
Thank you, sir.
Thank you. See you, sir.
Thank you. Thank you. Thank you, Mahavitra.
Thank you.
Thank you, sir.
Thank you, sir.
Can we close the meeting?
Yeah, we can end the meeting.